Okay, let us look at the other example here. Receive 250, yeah, receive 250 payment from customer who paid on credit. So this is interesting. We receive cash, yeah. So our cash will increase. So cash is asset. So increase in cash, we're going to debit. So the answer will be debit. I'm going to debit cash account. And the customer who paid on credit before this is your account receivable. Your account receivable, yeah? This is your assets. When they make payment, the amount you're going to receive in the future will reduce. So this one reduce in account receivable. So the effect will be on the credit side. So the answer will be credit account receivable, debit cash. Okay, so this is the answer. Cash, debit 250, account receivable, debit mean increase, account receivable, this is asset, credit mean reduce or decrease by 250. So what are the adjustment here? Okay, debit cash, increase in cash, debit, and account receivable, credit by 250. So you just transfer to the correct account. We don't, previously we have consulting revenue 1250. Now when we credit the same accounts here, our consulting revenue balance will certainly reduce. That is 1250 minus 250. So the balance reduce. The balance reduce. Yeah. Next, Andrew, sorry, Amber, withdraw 600 cash for personal living expense. Personal living expense is considered as drawing. This is drawing. Yeah, your personal expense cannot be included as business expense. So this is drawing. When Andrew withdraw 600, automatically your cash will reduce. Your cash is your assets. So when it reduce, you're going to credit the accounts. Credit the accounts. And drawing is also fall under the same rule here. Increase in drawing, you're going to debit. So I'm going to debit drawing, credit cash. I'm going to debit drawing, credit cash. Okay, there's a question there whether drawing will affect capital. Indirectly, the answer is yes. At the end of the month or at the end of the year, we are going to offset the amount of drawing to the capital account. So the more drawing, the lower will be our net capital. So don't draw money a lot from your business because it reduces your capital. So the answer for this transaction is debit drawing $600, credit cash $600. Okay. And how we're going to record this? We don't have a drawing account yet. So I'm creating a new account, drawing accounts, debit 600. So this is the date, 20th June. What are the description? The drawing is in term of cash. So that's why you put cash there. And in our cash account, we're going to record, we did record it into the credit side. Can you see here, the credit side? So what are the description of this money out? This is money out. So reduce in cash because of drawing. So this is the drawing. Yeah, taken by the owner. Taken by the owner. Okay, can you follow me? Let me repeat again. The drawing increase. So you're going to debit the drawing. Cash reduce. You're going to credit your cash account. You're going to minus your cash balance then. Okay. And then next one is paid electricity expense for June 640 using online banking transfer. What is this online banking transfer? I mean you directly pay the utility companies using your bank account. Yeah. So in this case, your cash will reduce. This is your cash asset reduce credit. Credit. Your expenses will increase. So in this case, expend increase is going to be debit. So expend increase, debit, cash reduce, credit. Cash reduce, credit. So the answer is electricity expend debit 640, cash credit 640. So we already have our cash account, and then we need to create a new account for electricity 28 June, debit electricity 640, and our cash, we're going to credit here cash account by 640. This is money out, yeah? Cash reduce here. Electricity expand increase. Electricity expand increase. And finally, we paid 1,000 on accounts for the account receivable. Paid 1,000 on account for account receivable. Mean we paid our account receivable. Sorry, account payable. This is our liability. Sorry about that. So this is our liability. When we make payment, what happens is our cash will reduce. Cash reduce, asset reduce, credit, liability reduce. When you make payment, your liability reduce. So you need to debit the account. So debit liability, credit assets. Reduce in asset, reduce in liability. Reduce in assets, reduce in liability. So the journal entry will be account payable, debit 1,000, cash, credit 1,000. I repeat, account payable, debit 1,000, cash, credit 1,000. So this will be your journal entry. If you look here, your account payable, previously you have 40,000 and 5,000. Now you make payment of 1,000. So your account payable certainly will reduce to 44,000. 40,000 plus 5,000, 45 minus 1,000. That gives us a balance of 44,000. Whereas for our cash account, reduce another 1,000, another 1,000 here. That is payment made to the account payable or to your supplier, creditor, yeah, to your creditor. Okay, that's it. So we have completed all the transactions. So hopefully you know how it works. You have to go back to this formula. This is very critical formula. So I want you to always have this formula with you. So it help you to answer these questions to determine whether it's going to be debit or credit.